Is my screen visible?
Visible.
Okay, sir. Thank you, sir. We start today's market talk. While we may have growth, are you paying the right price for that growth? That is the key question. As Warren Buffett said, that price is what you pay, value is what you get. And India's valuation premium over the emerging market peers has compressed sharply over the last 1 or 2 years. With India's macro environment improving, the earning forecast will get revised upwards. So I think we are somewhere closer to the bottom right now. But one also needs to see as to what is the price you are buying and what value is being generated. Like, for example, Urban Company trades at 15 times market cap to sales. Now, how do you make money out of that? Pidilite trades at 64x FY26 expected earnings. So, all these valuations leave limited margin for error. And moment there is an error, as you would have seen, the stocks are just stumbling, not even stopping. They will fall 25-30% because valuations are at such elevated levels. So that is why the only thing which you can control is the price at which you pay for a stock. Now, key issues which we need to analyze. First, will AI valuations take a tumble? This is the problem which the world is grappling with. There are questions on quality of generative AI output amid rising costs and barriers to effective integration. Corporate adoption of generative AI has been slower than expected. Consumer adoption of ChatGPT, which is the most known stuff, has grown exponentially in the last 6 months. But conversion from free to paid usage has been only 5 to 6%. And OpenAI burned $2.5 billion to clock $4.3 billion of revenue. So that is the problem which people are saying, that is the amount of capital which is being spent will generate adequate amount of return on capital. Annual industry-wide capital expenditure of AI firms is expected to touch around $500 billion by 2030. Even Nvidia may have to revisit its model if low chip usage models like DeepSeek gain prominence. As it continues, though, presently it continues to benefit from the spending surge in AI chips. So everybody has to rely on their chips only. So they are always beneficial. Now, what happened with OpenAI was their CFO revealed that company is trying to rope US government to lower borrowing costs and access more capital. So what he was trying to see, or what the market interpreted, is that he wants to tie everyone's fate to themselves. That is Nvidia, Microsoft, Oracle, hyperscalers, and now taxpayers also, to how they are going to perform. So the markets stand that they are not confident. So there is a massive correction after that. I'll show you later. Now coming to India, the consumption revival supported by GST cuts needs to be sustained. And the reason was, it is not because of any benevolence to anybody. The revenue growth, the tax revenue growth of the government in H1, first half of the year, is just 2.8%. So government needs strong consumption rebound. Any shortfall will risk spending cuts and tighter FY27 budget. So we need to wait and watch and see if the post-festival trend continues of these high amount of sales which is taking place. Will it continue post-trends or post-festival season now, or it is just one time? There is a rural tailwind powered by a good monsoon, which is creating genuine demand across sectors from vehicles to FMCG to housing materials. Good rains equal better harvests, which lead to higher rural income, which spur rural spending. So some of the beneficiaries could be like Shriram Finance, which is already running, Godrej Consumer in personal care and home care, premium skin care, face washes, etc. So people, what happens is they move from soaps to face washes. So they move up. If they have more money, they will move up the value chain. So the companies make more money. Crompton, they say basically electrical consumer durables, small domestic appliances, solar rooftops, etc. So these products may find good demand in rural households. So that is one another factor which has to be seen. And then lastly, the investment cycle visible in the credit growth and infrastructure lending turning after years of false starts. So the loan demand from small businesses and large firms may keep the growth rate healthy, because once consumers start buying, the producers also have to begin to increase output and then indulge in capex. So if the consumption goes up, then the people will also, all the companies will think about creating more capacity. So the capex cycle starts, and once the capex cycle starts, then there is more demand for credit. So the banking credit also goes up. Presently, power and ports have shown a jump in credit offtake. Proposal for new projects reach around 3.1 lakh crore in October in manufacturing sector. And SBI has guided for 12 to 14% credit growth in FY26. So things are looking good in terms of investment cycle also. Now coming to FIDI data, FIs have increased their short positions. Now in terms of index futures, they are 1.52 lakh short positions. They have bought calls, but they have also sold puts. So basically, net they are bearish. Pros, professionals, they are mildly bullish. They have some index futures, long positions. They have bought some calls, but they have sold. They have a lot of puts also. So they are actually hedging their positions. So they are net mildly bearish. Clients are net long, strong bullish positions, 1.09 lakh long positions in index futures. They have sold calls and they have sold puts also. So overall, if you see, the clients are net long. So the positioning is FIs are short, pros are also mildly short, and clients are long. So this is the positioning, not much change from last week. Now what has happened over the last month or so, from 1.94 lakh positions closer to the expiry, the FI short positions came down to around 92,000, became half, and now they are slowly piling on short positions in index futures. It's a trend which will continue now. It will go up to the same around 1.9 or 2 lakh short positions, and then it will turn after that. So people are turning slightly cautious. But if you see here from this side, the moment they have started turning cautious on their positions and started turning cautious on index options, the Nifty has been falling after that. It made a high somewhere around 26,000, and after that, every day, because of bearish positions, it is falling. Now coming to the US, it had a volatile week due to broad risk of move fueled by worries about AI trade and valuations. And the other issue was that Michael Burry disclosed that he is betting against Nvidia and Palantir. So the US markets started going down. Now, if you see the bond yields, they went nowhere. So people are not sure as to exactly what is going to happen in terms of rate cuts, etc. So there is no direction, but it is above 4. That is the 10-year bond. The dollar started strengthening, but now it subsequently fell on Friday on concerns over US economy. And euro went higher due to steady policy rates or interest rates by the euro. So dollar is also poised somewhere closer to 100, but it still was going up. And because of that reason, the metals were correcting. Brent crude moving nowhere, corrected actually. And gold, it is now consolidating. I think it is trying to make a base somewhere around $4,000, and with all this uncertainty, etc., and it has corrected around 10% from the record highs. due to profit booking, easing geopolitical tensions, and strong US dollar, etc., and also Fed's hawkish tone. So, despite the correction, the point is the central banks remain net buyers. So, gold, you can now from here start buying at every correction. Similarly, with silver, see it's consolidating, not going anywhere, and moment it starts going up from here, it will again test the fresh highs. So, one has to just keep look out for these things. Copper corrected because the dollar was strengthening and the Chinese economic data was weak, so it corrected. Bitcoin tumbled around 6%, 6.9% on concerns over US economy. And the basically, it is just now getting into a bearish territory. If it closes below this $1 lakh mark, which they're just trying to defend this $1 lakh mark or this rising trend line, then it'll go down more. S&P 500 corrected 1.6%. Nasdaq had broken up through the rising trend line, corrected around 3%. And Dow also corrected 1.21%. The biggest fall came in Palantir. Now it corrected 11% on the news, basically of Michael Burry shorting it. So let's see what happens. Now coming to India, India VIX not moving much, but it is at around 12.5 odd level. So it is at similar levels where it was. Now, if you see Nifty, what happened with Nifty was it tried to go up for last 2 weeks, had failed, and this week it was a clear red candle, and it tested that declining trend line from where it had broken out. So if it remains above this 25,600 level, which is where this declining trend line comes, then it can bounce from here and go up. Otherwise, it will go down and test lower levels and then try to regain strength. Coming to daily charts, if you see here, it broke the 20 EMA at somewhere around 25,600 and then went below and tested the 50 EMA on Friday. So bounced from there. So there is, but the trend, if you see, trend, if you see, is down. Trend is moving downwards. So one has to be careful. So the basically point is that this 25,330 odd levels is the support and 25,600 would be the resistance. So if it is within this zone, it will consolidate. Either it has to break out above 25,600 for some support or it may go down. So we'll have to see how the events unfold. On the hourly chart, there were two gaps. So it came down, filled this gap, and then bounced from there, somewhere around this 25,330 odd levels. So this level becomes crucial. So it may just come down, take support here, and then again bounce. So we'll have to see. But on hourly charts, it is looking weaker. And it had become oversold also, so the bounce was due. Now Nifty Bank is strong. And it made a green candle, was flat actually, but still it has not broken down. On the daily chart, it came and bounced from the 20 EMA. So that was a solid green candle, which engulfed the previous day's candle also. So that is a sign of strength. And this is one segment which is showing strength. The move was basically because of short covering in ICICI Bank. It got oversold, so it bounced on Friday. And also the PSU banks, which is one segment which is in momentum. So this has broken out from the previous high. So this is one segment which is leading the rally. That is the PSU banks. IT continues to be weak. So one has to be careful here. Metals, they bounced from the support, but then have come and tested the support. So this 10,200 level is important, but I think if the dollar is strong, the metals will correct, and there is The Chinese trade data was weaker than expected. So there is a overall sell-off which is taking place. As you have seen, the global markets pulled back. And also there is some uncertainty due to US government shutdown. So these, so that's why the US markets and rest of the world, Japan, South Korea, etc., are correcting. So till the time these things are correcting, and Hindalco, one of the reasons for the fall in metals was Hindalco, because the Novelis numbers were, or the guidance was bad, plus they are doing a lot of capex, so which the market didn't like. So that was one more reasons for the fall. Autos, now people are waiting and watching to see if the trend of higher sales continues beyond November, December. Financial services did well. So NBFCs also performed and it was up 0.37%. So this is one segment which is good. Now, if you see here, Midcap Select. Midcap Select is on the verge of a breakout from this multi-month cup and handle pattern. So if it goes above this 13,400 odd level, it can head higher. So this is one segment you can trade long with a decent level, maybe around 13,000 put, etc. But this mid-cap select is looking good. Small caps corrected 1.66%. So this segment of the broader market sold off. So if you see overall, if you see the long trades were basically in Shriram Finance, SBI Life last week. Shorts, as I told you, Hindalco, Power Grid, Grasim, and long unwinding, because of which the stocks came down, was seen in Larsen and Toubro, Bharti, JSW Steel, etc. So this is how the things played out. Nifty Bank will continue to outperform, and that is the only reason Nifty has not broken down, due to strength of PSU banks. So we'll have to see how it goes ahead from here. Now coming to major stocks, so HDFC Bank, it has taken support at 100 EMA. So this 970 level is providing support. It bounced from there. So we'll have to see. There is no strength in the RSI as such. Reliance, again, at around this 1470 level, it is taking support. But again, not moving up. RSI is going down. But above 60, it is still having some momentum. The stock which broke out from a medium-term resistance was BSC. Broke out with large volumes. And RSI was high. And it has taken support at around 2000 level in October, September, October, and then has steadily bounced. It was halting at around 2550 level and correcting from there. And then on Friday, because of short covering, it took it out. Let's see what happens from here. But the point is that on the same news, you can't take the stock up every day. So the news is the same, that FNO expiry is not ending. But on the same news, you can't just keep playing the stock on the long side every day. So we'll have to be careful with this. Now I'll cover this HVDC opportunity. It's a big opportunity. That's why one has to understand this. This is called high voltage direct current. This is basically used for transmission and distribution sector and technology which is used for that. India is looking to bring variable renewables on the grid from far-flung areas or in concentrated geographies to the distant load centers. And HVDC is the perfect solution for that. Hence, because if you're creating renewable or solar parks in Rajasthan, in Gujarat or Leh, Ladakh, then how do you bring the power from there to the areas where the electricity is going to be utilized, to the hinterlands? And that is why these are basically required. And people are also talking about creating offshore wind energy parks, etc. So even those, somebody has to bring the power or energy which is generated from there to the hinterland so that it can be used in the grid. So that's why HVDC is important. 6 projects have been approved with a cost of 1.5 lakh crore. So average cost is of a project is around 20,000 crore. So moment you get an order, it's a big order. Now, recently, two HVDC assets have been modified to HVAC asset, that is alternating current, high voltage AC current assets, primarily due to specific instances because of constraints. Now, grid has approved 6 HVDC transmission assets, 2 have been awarded, 3 are under various stages of finalization, and 1 converted to HVAC asset. At least 12 to 15 assets are under various stages of discussion. HVDC systems use converters in order to switch from DC to AC and vice versa. So you require converters also. Two main types of energy converters are used. First is current source converters, and the second is voltage source converters. Now that is VSC. Now VSC based HVDC is a recent technology that provides higher operational flexibility. So you have to see who has got this technology. Now Hitachi and GE are present in both the technologies, whereas Siemens Energy is present only in VSC. So again, the contracts or the people who will bid will be the ones who will be having this technology and the kind of resources to do these big projects. Now, to see approved HVDC projects, roughly around 1.5 lakh crore. So, Leh Ladakh thing has been converted to HVAC, but there is no change in such of capex, etc., the cost of the project. Then there is a Khavda Nagpur, which has been given to Power Grid, Khavda Olpad, which has been given to Adani, Bhadla Fatehgarh given to Adani, and the other two, the bids have yet to be floated. So various types, VSC, LCC, VSC, LCC, etc. Now the point is, as I had covered earlier also, two of these projects, that is Bhadla Fatehgarh, Khavda Nagpur, the Adani Group has ordered the equipment from Hitachi and BHEL consortium. So at the end of the day, you have to understand these issues. Now, proposed HVDC projects are roughly 3.6 lakh crore. So there are so many which are awaiting or converting to HVAC, etc. But each project, as I told you, would be roughly 20,000 crore. So that is the rough cost, and there would be various types, VSC, LCC, etc. So all these three players who have it will get these projects, because one player cannot execute all the projects. Now, apart from these, there are some cross-border HVDC transmission projects being planned by India. Undersea HVDC transmission link to Saudi Arabia, 2,000 megawatt worth 47,000 crore. Undersea HVDC transmission link to UAE, 2,000 megawatt worth 43,000 crore. And Madurai, Sri Lanka HVDC worth around 10,000 crore. So with around 4 lakh crore worth of projects under the approved and proposed list, estimate an equipment total addressable market of 2 lakh crore. So whoever may get the project, they will need to procure equipment roughly are worth around 2 lakh crore from these vendors. Now, let's first talk about players who are there, and then what are their valuations. So if you see 4 players, Hitachi Energy, GE Vernova, Siemens Energy, BHEL. Market cap wise, if you see, Siemens Energy is the biggest among them, more than 1 lakh crore market cap. Now, if you see valuations, irrespective of the FY25 or FY26 expected valuation, FY27, if you see, as per expected earnings, the three key players, Hitachi, GE Vernova, and Siemens, are at generally the similar valuations on expected earnings. Around 48, 49 times FY27 earnings. So there is not much of difference from their present value or price for if you discount it to FY27 earnings, and PE wise also 70 or 60 odd levels. Now, if you see their earnings, each one of them, their earnings this quarter, see, now GE Vernova, they did around, this is in millions, so 1,538 crores. From last year, it was up 39%, and profit was up to 2x. The key issue why the profit is going up is because EBITDA is going up. So the margins have improved. So this is a clear distribution as to how the margins are improving. And profit before tax also, margins have improved. So because of this, the profit is percentage is going up. There is an exponential growth in profit. So they have done roughly 2,868 crores in H1 this year, right? So this, remember this number 2868. So they have done this already in H1. Now, if you see GE Vernova, what is targeted is around 5,600 odd crores. So they should be able to achieve this 5,600 at least crore for this year. Next year, they are expected to do around 80,000, or sorry, 8,047 crore, and with the EPS of around 53 odd, right? So 53.7. So even if they do this, now these estimates can change. So at these estimates, presently this is somewhere around 60 times FY27 earnings. So if you see here, the EBITDA margins have improved and are expected to remain about 20%. They are coming down because subsequently these companies are planning some capex, etc. Net margins, profit margins have improved, but if you see from FY25, they have improved tremendously. They're expected to do around 30% revenue growth, EBITDA growth around 70 odd this year, and profit growth also very strong. Now, seeing their chart, it rose from this 1200, 1300 level, and now it has reached 3000. So it is presently at 3073. So every dip here is a buying opportunity if you can hold this stock for a long term, because the opportunity is immense in this sector, and these guys have started performing very well. And moment their earnings were very good, in if you see here, after their earnings, it went up drastically from this 2400 level to 2900 odd level. So it went through upper circuits and went up. So this is where the re-rating took place, and after that it is just moving along. This quarter results have been also very good. Now the next one is Hitachi. Hitachi also, if you see, they did around, this is in crore, so 1915 crore revenue they did this quarter. And for this year, they have already done 3,400 odd crores. Profit before tax, as I have shown you, last year they were doing a profit before tax margin of 4.5%, and now this has increased 4x. And this is the reason why, to see here, last year they had, in the same quarter, they had done 52 crore of profit. It has become 5x. So they did around 23% revenue growth, but the profit went up 5x year on year. And this is the reason why the stock has got re-rated. They have done around 396 crore of profit and 3435 crore of revenue for the first half of the year. So they should also be able to achieve their FY26 target of around 8628 crores of sales, which they're targeting. So next year and after that, they are expected to grow up at around 35 to 40%. And adjusted EPS, so if you see here, from FY23 onwards, from 22 rupees, it has moved to, and it is from 27, it is expected to be 285 rupees. So that is roughly 14x. And this is the reason why the stock has got re-rated, because of good order book and exponential growth in profits because of higher EBITDA. And the reason is EBITDA margins from 5% are going to reach 13 or 14%. And ROE has also improved. So that's why it is directly going into the bottom line of the company. So if they are going to do an EPS of around 285 in FY27, at 285, this is presently at around 70p. So that is why. But With this kind of a growth and huge pipeline of orders and execution, so people are ready to pay this price. Now, if you see the chart, it went up to around 2200, corrected from there, sold off, took support at 200 EMA, and luckily we bought here at 200 EMA, and then post earnings, it has again gone back to around 21,000. So it remains in momentum with good volumes. It has gone. It is not grossly oversold, so it has some. I think it will go up to 2200 odd, and then we will see from here. But this is in good momentum now. The third one is Siemens. Now they said they do their results in a different way, but they have not come up with their Q2 results. So this Q3, which is written, is actually their Q1 earnings. So if you see here, they did around 1780 crores. Operating margins are going up around 19, and they reported around 262 crores of PAT and 74 rupees earnings in the first quarter. So we'll have to see, still wait for this quarter's earnings. Now, what they are expected to do is they are expected to do around 9,259 crores and 11,527 crores in FY27 of net sales. Operating income is expected to grow around 20-24%. EBITDA growth is again 20%, 27-28% is expected, and similarly 29 to 28% profit growth is also expected. EPS in FY27 is expected to around 52. So this is Siemens is around 60 times right now. EBITDA margins are improving. ROE, ROC are also moving up, and they are north of, ROE is north of 20, ROC is north of 30. And that's why I told you it's somewhere around 60 times right now. The FY 27 earnings. Now, seeing their charts, if you see here, it went up after listing, recently listed in June, went up to around 3600, has corrected, and now it is consolidating. So next move will come post the earnings. So it is at around 3200 odd level. So next move will come around after the earnings and how the earnings are taken by the market. Now we'll do a comparative summary. So if you see here, Siemens Energy, high value transmission and distribution gas turbines, strong positioning in advanced transmission and distribution equipment, expected to be a key beneficiary of upcoming VSC based HVDC projects. As I told you, they are the ones only in VSC, and they have lot of capacity. So capacity utilization is currently under 60%. So they don't have to do capex. So they have a huge opportunity for operating leverage because fixed costs are going to remain the same. Future growth outlook is very strong. People are expecting 37 to 40% EPS CAGR over the next few years, primarily driven by T&D and operating leverage. Now the next is Hitachi. They dominate HVDC, a leading position in the awarded HVDC projects, including the massive Bhadla-Fatehpur project, strongest current order book, providing multi-year revenue visibility. So future growth outlook is again strong due to large order backlog. Net profit CAGR, as I have shown you, from it has grown up nearly 14x in 4-5 years. Profits over the last 8-9 quarters being the highest among peers. Now, GE Vernova, they are focused on transmission and distribution and parent support to leverage the global technology and scale of GE Vernova. So they are pure play transmission and distribution segment, beneficiary of grid modernization and smart grid investments. Again, outlook is strong. They have shown strong Q1 and Q2 growth. So they are now improving, and analysts are estimating their global earnings oblique sales to improve, which can support its India subsidiary growth trajectory. Now, if you see here, primary focus of Siemens is on T&D and gas turbines. Hitachi is strong in HVDC, and GE Vernova again in transmission and distribution grid solution. So the differentiator is Siemens is the best combination of T&D and gas power. Good backlog for Hitachi, current leader in HVDC execution, because if 2 orders out of 2 have gone to them, most probably third will also go to them only because of existing performance. GE Vernova, good balance sheet, pure play T&D focus, and global energy spin-off, they are part of that. Growth drivers, volume margin expansion for Siemens Energy operating leverage, execution for Hitachi, and grid modernization and large T&D orders for GE Vernova. The Siemens is trading at a premium due to high expected EPS growth in future. Hitachi has got highest PE, reflecting near-term revenue visibility because of backlog of orders. Now, GE Vernova is relatively lower PE than Hitachi and maybe having better value entry point among the three. But very seldom they will give you entries. So if you see their trailing P is 200 times plus for Siemens, 129 times for Hitachi, and GE Vernova around 85 times. But if you see the forward Ps, as I told you, Siemens and GE Vernova are generally the same. Hitachi is slightly 70 plus type, but all depends on execution. So valuation takeaway is that they should do around 40% CAGR driven by operating leverage and project wins. They should do well, that is Hitachi, based on execution capabilities in complex HVDC projects. And GE Vernova trades at slightly lower multiple, but performing, potentially offering a more reasonable entry point while reflecting higher growth. So I have finished. We'll take questions now.